I will tell you a secret. The rich don't work for money. Robert Kiyosaki said this years ago, and while most people think it's just a motivational quote, the reality is far more shocking. In fact, while you are struggling with income tax, the world's billionaires are paying effectively 0%. How is it possible that a secretary pays a higher percentage in taxes than Elon Musk or Jeff Bezos? Is it illegal? No. It is a carefully designed system. If you don't understand these rules, you will stay trapped in the tax hamster wheel forever. Today, I will reveal the 3 secret pillars the wealthy use to vanish from the taxman's radar. And pay close attention because the 3rd pillar, something called buy, borrow, die, is the exact reason why the richest men on earth never have to sell a single share to live a luxury life. Meet John. John is a hard-working employee earning $100,000 a year. Every month, before John even sees his salary, the government takes 30 to 40%. John is playing the game on hard mode because he earns earned income. This is the highest taxed form of money on the planet. But then John meets an insider. The insider tells him, "John, stop owning things, start controlling things." Why did John decide to fire himself and work for a company that he owns for just $1? We will get to that in a moment. The first thing the wealthy do is use a holding company. Instead of John receiving his profit directly, he sends it to a mother company. In many countries, moving money between companies is taxed at nearly 0%. While you pay for your coffee with taxed income, John's company buys his laptop, his car, and his travel as business expenses before a single cent of tax is calculated. But wait, it gets crazier. You might be wondering, if John's money is stuck in stocks and companies, doesn't he have to pay taxes when he sells them to spend the money? The answer is no, because John never sells. This is the buy, borrow, die strategy I mentioned earlier. Imagine John has $10 million in stocks. If he sells them, he pays millions in capital gains tax. Instead, John goes to a bank. He says, "Look, I have $10 million in stocks. Give me a loan for $2 million. The bank says yes and charges him a tiny interest rate. Here's the kicker. Loans are not income. You don't pay taxes on borrowed money. John now has $2 million in cash to spend on his lifestyle while his stocks continue to grow. The growth of his stocks is usually higher than the interest on the loan. He's getting richer by being in debt. So how do you break free? You start by changing how you receive your money. You move from earned income to asset-based wealth. John doesn't pay income tax because he has no income in the traditional sense. He uses holding companies to shield his profits, transfer pricing to move his wealth, and loans to fund his life. The system isn't broken, it's built this way. The question is, are you going to keep playing by the old rules, or are you going to start building your own structure?